Good
No.
afternoon. Good afternoon, everyone. We'll be starting in a few seconds. Thank you for attending today's webinar. Also, if you have to step out, answer a phone, by all means, don't worry. This is a recorded webinar, and will be emailing everyone the slides and also the video link through our YouTube channel as well. In addition, if you have any questions throughout today's webinar, I strongly encourage you to put them in the Q&A, and we'll be more than happy to moderate them on your behalf. And also in the chat, I strongly encourage you to introduce yourself, what type of business you have, what are some challenges that you're experiencing in the financial management, any tax questions. We have some of our colleagues that are present that will be speaking in certain slides and answering throughout the presentation, along with Lillian, based on from her experience working with small business owners as well. So without further ado, allow me to introduce you to Clementina Valladares. She is one of our colleagues from the Startup FIU local. Clementina.
Good afternoon, everyone. Thank you for giving us the opportunity to serve you and provide valuable information that will help your business moving forward. My name is Clementina Valladares. I am the program manager for Startup FIU Local, one of the spokes that serves this program. And we provide consulting assistance to all the business from our community. I've been at FIU almost 8 years, and we are very delighted to be part of this amazing program that the SBA power and give the opportunity to provide all the needs that all of you as small business owners have and help you scale your business.
All right, thank you, Clementina. Also, I have one of my great colleagues and great friend, Sonia Bernard, and she'll be introducing herself. Sonia?
Can you hear me?
Yes, we can.
Thank you so much for having me over. Dania, my colleague, and I work with ADP, and we help small businesses with payroll and human resource services. And we very happy to join you and help you with any questions that you may have, and when it comes to payroll services and human resources. Dania?
Yes, my name is Dania. I work with Sonia. Like she said, in the same industry, we work with a lot of small business owners that have employees from 1 employee all the way to 49 employees. We also partner with other departments that do also handle larger accounts with more than 50 employees, but we are usually centered around the small business sector. So we're very happy to be here.
All right. Thank you, Dania, and thank you, Sonia. So once again, my name is Jesus Padilla. I am the manager of administrative services here at the Florida SBDC at FIU, and also along with the Miami-Dade Business Navigator program. I'll go over a brief description of what is the Miami-Dade Business Navigator program, how you can meet with Clementina, with Dania, with Sonia, with Lillian, and all the other organizations that are available at your disposal, and once again, at no cost. So a brief description of the Miami-Dade Business Navigator program is funded through a cooperative agreement through the Small Business Administration. It was established in part of the American Rescue Plan Act of 2021, using the Community Navigator approach to help the small businesses in the economic recovery, in which the program is comprised as a lead hub. In this case, it is the Florida SBDC at FIU, as a center of a network spoke organizations that deploy community advocates to work with small businesses. The sole focus of this exciting program is placed on businesses owned by women, veterans, as well as socially and economically disadvantaged individuals. And as you already heard from Startup FIU Local and the Florida SBDC at FIU, we also have Ascendis, we have branches, the EDC of South Miami-Dade, Miami-Dade Chamber of Commerce, and Prospera. All of these 7 organizations are available to work with you and to grow, succeed in government contracting, access to capital, launching a business, in all different facets of what small business entails. We have a specialized consultant that can work with you. And once again, it is the overall coalition is a $2.5 million grant to work with businesses that are physically located here in Miami-Dade County. But if your business is located outside of the region, by all means, we'll be in communication to work with you along with our colleagues from your local small business technical assistance centers as well. So without further ado, allow me to introduce you to Lillian Orbant. She's today's presenter and also a business consultant here at the Florida SBDC at FIU. So Lillian, the floor is yours.
Thank you, Jesus. Good afternoon, everyone. My name is Lillian Urbant, and I am one of the business consultants for the SBA Community Navigator Project program. And I'm happy to tell you that my area of expertise is accounting and tax. I am a tax practitioner for more than, I love what they wrote on me. It says more than 2 decades. So that means I've been in the business for a long time. And my job with the SBA Community Navigator program is to assist small businesses. And the beauty, like Jesus mentioned, is at no cost. And we can spend as many hours as you need us. This particular class is called a Small Business Tax Consideration because that's my area of expertise. And although I've been doing it for many years, we had to put a disclaimer because this information is intended to provide insights on common tax considerations faced by small owners. As it is not possible to cover all scenarios or circumstances, there may be other consideration or steps that you will want to follow, which are not included in this review, including legal and tax-related issues. That's where your CPA comes in, your accountant comes in, so that they can help you. My job is to teach you. And what I do is when the person is really interested in doing it themselves, I send them information directly from the IRS website. The disclaimer and the assistance that we provide is to better understand any legal or tax obligations for your business. It is highly recommended, again, that you consult with your tax or legal partners for any additional information in those key areas. What is tax planning? Let's go right into the program. Tax planning is an art, the art of arranging your financial affairs in ways that postpone or minimize taxes. It's not that we don't want to pay the IRS, we just want to pay our fair share. If you learn and practice tax planning in your business, cash flow increases. When cash flow increases, you have more money to invest in the business. If you notice, I said more money to invest in the business, not more money to take it out, because if you're a small business, whatever revenue, return on investment is coming in, is to increase the business, to make it profitable and larger. Tax planning includes the timing of income, the timing of purchases, and planning for expenditures. Tax planning can include saving for retirement. As a small business, like if it is a one-member LLC, you can have a IRA, which is called SEP, set up for yourself through a bank. As an entrepreneur, there's no secret that we spend many hours planning how to make our business successful. And we trust our professionals to help us with tax planning because we fear the unknown. The unknown is what makes us scared and not wanted it to learn. But let me tell you, I started from zero. And because I practice every day, because I read the code, it makes it easier, and that should be the same case for you. let me just close here because I can. Tax planning and preparation. Each business is legally required to pay taxes. The IRS does not wait for us. We have to wait for them. And keep accounting records in a consistency yearly schedule called a tax year. Tax year is from January to December. Then we have the calendar year that it could be January to December, but if we change the tax year to a different year, you fall into 2 years. But that is something that you need to talk to your accountant. My recommendation, try to do your tax year to be your calendar year. And if you register the company in the middle of the year or after the year started, the first year will be considered a short year. Most businesses choose their tax year to be the same as the calendar year. That's what I just said. The first time you file tax return, you select your tax year. Don't worry though, you can request later to have the IRS change if needed. Now, it sounds easy, right? But you cannot just do it. You have to send a letter to the IRS and the IRS has to accept it. If your business does not have much reporting or bookkeeping, you might be required to use the calendar year. And I'm giving you the IRS website where, like I said, my job is to teach you. And here you can visit this website that is directly from the IRS to learn a little bit more about it. If you have questions as to what year to select, your best source of information is the person that's going to be preparing your taxes. I can tell you, but the point is that I don't do your tax return. So it's very difficult for me to tell you what to do in your business because I'm your teacher, your business consultant, not your CPA or bookkeeper or accountant. I can give you my, how I would handle it, but the decision is between you and your CPA. To do it properly, you must follow the tax basis of accounting consistently. However, you can change the tax year with the permission of the IRS, like I mentioned before. You also may not change your method of accounting unless you request the permission from the IRS, because there are 3 methods of keeping the books. One will be the cash basis of accounting, the accrual basis of accounting, and the hybrid method of accounting is a combination of cash basis and accrual basis of accounting. Jesus? Okay, let's talk a little bit about the different methods of accounting. Cash basis recognizes revenue and expenses at the time cash is received or paid out. Meaning money come in, you report it. Money goes out, that's in the period of the month, the year that you report it. The accrual basis of accounting recognizes income at the time the revenue is earned and record expenses when liabilities have incurred, regardless of whether cash is received or paid. Now, the best method of accounting is the accrual basis of accounting. Why? Because if you use a software program like QuickBooks, you can keep your books on the accrual basis of accounting, but when you're going to do the taxes, it's just a click away. You put it on the tax basis of accounting, but on the accrual basis of accounting, you can know exactly who paid you. If you will have to create invoices, you would know exactly when they paid you. If they paid you a partial payment, you know how much they owe you, how much they haven't paid, and you can send your client a reminder telling them, hey, you owe me money. Whereas on the cash basis of accounting, you don't have invoices unless you create invoices and you put it, the day you receive the money as received. But the point is that if you have a system where you have invoices, you can literally see who owes you money. The same as who you owe money to, because you will have to create bills to keep track of how much money you owe. And the hybrid, like I mentioned before, is a combination of the cash and accrual methods of accounting. The IRS will accept the hybrid method if, this is very important, if the combination of the cash and accrual methods of accounting clearly reflects your income and you use it consistently. Like I said, the IRS is not going to allow you to change from one method to the next. Now let's go into how is your income tax. There are different types of corporations different types of companies. At the corporate level, you can register an LLC, you can register in Sunbiz. And I'm talking how it works in Florida. You can register a corporation. But let's say you register a corporation and then you make the election to be treated as an S corporation. In Florida, you have to register a corporation and you make the election to be treated as an S corporation. And you can learn more about C corporations, which is the default on publication 542. Whereas the LLC, which I'm leaving it for last, is because there are different ways of handling it. If you register an LLC in the state of Florida with one member, the IRS automatically treats you as a Schedule C, which is the IRS default. But then that LLC, you can make an election to be treated as a C corporation or an S corporation when completing Form 8832. If you make the election to be the LLC to be treated as a C corporation or an S corporation, now the IRS code follows the C corporation requirements. The IRS, the company will follow the S status corporation with the IRS. Now, if the LLC has two members or more, the IRS will treat this company as a partnership. If you become a partnership, you can, at certain points, partnerships also, oh no, I don't want to be treated as a partnership, I want to be treated as a C corporation. You can do that, you can change it, but if you started as a partnership, or if you make an election, it doesn't matter if it is one member or two members, and you change your mind, the IRS says, yeah, I'll let you change it, but you have to wait 5 years to be able to do it. So you have to consider this carefully before you register a company. Now, if the company, this is the third bullet under the LLC, if more than one member makes the election to be treated as a C corporation or an S corporation instead of a partnership, you will still have to use Form 8832. Now, my job is also to teach you how to complete the form. It is very complex, but it's not difficult to complete. Complex because you're not used to the jargon they use, but this is where I come in and I explain to you what each line means, and then you make the decision, because the decision has to come from you. Next.
Lillian, I have a question for you.
Sure.
When filing for taxes, the income is reported as received or as generated from cash basis or accrual basis?
It depends on what method of accounting you're selecting to prepare the tax return. If you decide that you're using the cash basis of accounting, in the tax return, it will be cash basis of accounting. You will report your revenue on the cash basis of accounting, meaning it already hit the bank. It's already in the bank. And it will be the income minus the expenses that already hit the bank. When I say hit the bank, is that you already paid. And if you receive the money, that is in the bank account.
All right, perfect. Thank you.
Okay, this is a little bit, it's just a little diagram of how it works, right? Because you can have, as a sole proprietor, automatically, if you register an LLC, this is considered a disregarded entity, and you're going to file a Schedule C under your personal tax return. But if you make the election to be the LLC one member, to be treated as a S corporation, then you will have to file a business tax return. So this is the planning you have to do at the beginning. Now, if you are one member, and this is my question to you guys, if you are one member, it all depends on the liability of the business, because you can have an LLC, one member, As long as you have an operating agreement, you are protected because it says so on the name, limited liability company. But you have to have an operating agreement to make it, even if you file on the personal tax or you make an election to be treated as an S corporation or C corporation, I suggest to have an operating agreement. Now, if you register a corporation, automatically you have to file corporate tax returns. You have to. It's just, there's no other way. So you should be asking yourself, because tax practitioners like myself, the more tax forms we prepare for the client, we're going to charge you for it, right? So do you have the money to do that? What's the liability that the company has, so that you can determine whether you're going to state as an LLC, Schedule C, as part of your personal tax return, or make an election to be treated as a corporation. When you have corporation as well as LLCs, here we need to have insurance. We have to have general liability insurance. If you have payroll, you have to have workers' compensation. So that's where our friends from ADP can guide you through. I can give you general information, but if you have more information and you become a client of it, could be ADP or any other agency that the only thing they do is payroll or human resources, they will guide you through the process and they would help you. Next. As a business owner, as the shareholder or member of a company, you have obligations. You have to pay federal taxes if the company owes money. You have to pay estate taxes, not only for the tax return, but maybe you sell tangible items, which means you have to collect the sales tax and remit it to the state of Florida in this case. And you may have local taxes to pay. For example, if you own a venue, you will have to pay. It's treated as a hotel. If the individual stayed overnight, you will have to pay to Miami-Dade County. And one of the things that you need to be sure of is to pay, to plan, to separate the money, to have, this is where the tax advice comes in. If you already know, if you're keeping your books in QuickBooks, you already know that if you had to pay taxes to the IRS or any state agency or local agency, do not use all the money. Separate, because those people don't wait for you. And if you do, if you send the payments late, guess what? They're going to charge you interest. They're going to charge you penalties. So taxes is one of the most important considerations related to starting and growing a business. You have a business partner. You have an invisible business partner. And guess who that is? Uncle Sam. Next. Taxes? What taxes? What are you talking about? You know, that's the question, small businesses. Taxes, why do I have to pay taxes? I'm a small business. Yes. If you're making a profit, if you're at the end of the year, you have net income, guess what? Your invisible partner is going to come in and collect money. Now, it depends on where your business is located and the business is structured. That will be the amount of taxes that you will pay. For example, if you have an LLC, one member is going to be a Schedule C, and if you have net income, which is going to be reported, it's going to flow through to your personal tax return, is going to be at the same tax rate as your personal tax return. The same applies if you have an S corporation or partnership, because those two corporations, they flow through to the personal tax return with a form which is called K and the number 1. The S status corporation and the partnerships, give you a form, which is like the summary of what happened in the business so that you can report it in your personal tax return. And if you have a net income, like I said, the tax rate will be the same as your personal tax return. But if it is a net loss, it sounds really, positive about it, because you may not have to pay that much taxes, but that means that the business is not doing well because you have more expenses than revenue. But at the beginning, that's going to happen. You have more expenses to revenue. Next. It is important to keep your taxes up to date and have current financial statements for your business. When you have a software program like QuickBooks or Peachtree or any other software program, QuickBooks is the latest one that is out in the market, you can produce those financial statements with a click of a button as long as the information that it was entered in QuickBooks is correct. And when you read them, you can see the financial health of your business and also could impact your ability to grow the business. So the more you become automated to keeping track of your books, not only that's going to help you with the accounting, but it's going to help you with the taxes. For example, if you're going for a loan, you have to, and this is not the SBA talking, it's not Lillian talking, it's not the SBA Community Navigator program. The banks requires you to have 2 years of tax returns filed. And if you are, and they will consider it, because usually they ask for 3, but they will consider a year-to-date financial statement for the loan request, as long as it is like, I don't know, October, November, almost at the end of the year. Otherwise, but if you're at the beginning of the year, unfortunately, the banks, they do their due diligence for the SBA, because there are a lot of SBA brokers within banks, and those are the ones that do the due diligence. And if you get approved, then they said, hey, SBA, give them the loan. I checked their FICO, I checked their tax returns, I check everything, they're good. Go ahead and guarantee the loan. You should ask yourself how to find a CPA, an accountant, or a bookkeeper. The first thing you should do, talk to your fellow business owners or friends that in the same, that they have a business. But what you need to find out is if they are familiar with the industry, because there is a lot of accountants, a lot of CPAs that concentrate only in one area. We're supposed to be, know everything, but we don't. We specialize in certain industries. You can visit the American Institute of Certified Public Accountants and see the directory of CPAs, accountants, and bookkeepers. But before you do that, talk to your fellow business owners. And again, I repeat myself, review their industry experience and ask for the list of services that you will be getting from them. Don't be afraid to ask as many questions as you can, because if you don't, then you don't know what they're going to do for you, how much work they're going to do for you, how they're going to do the work for you. There are a lot of small companies that they don't require an accountant. And now they have this TurboTax. It has been in business for many years. I've been using it since 1998, I think. So they really know what they're doing. The issue with this is that TurboTax will walk you through the process if it is a personal tax return with the Schedule C. But TurboTax also has the business version. You can also do it. Would I recommend you do it? I said, no, don't do it. Learn from us first how it works, how to read tax returns, and then you may want to do it. But don't do it from the beginning, because I have seen it. Clients send me their tax returns and I said, okay, this is wrong, but they already filed, which means what? They had to amend the tax return, and that costs money. Next. When you meet with your CPA, your accountant, or bookkeeper, you should ask yourself who will do the work? Because the more work the accountant does, the more they're going to charge you, not only for the accounting, but for preparing the tax return. How are you going to be communicating with the person, with your CPA? Are it going to be face-to-face, Zoom, or phone? In my practice, I have had clients since 2000 and something. Some of them, I never met them in person. I do everything email and telephone. How often are you going to communicate with them? It is advised to meet with them, and if you're going to do it face-to-face, that you send them the information at least once a month, so that it doesn't become overwhelmed, because you are going to forget what you spend the money in. Not so much receiving the money, because you know who your clients are, but spending money, if that's the very, very important that you keep all your receipts. And I recommend you scan them, because in QuickBooks you can attach that receipt. And the major question of the day is, how much are you going to charge me? What are your fees? How much you charge for doing the accounting per month? How much do you charge to prepare the tax return? How much do you charge to do payroll if they're going to be doing payroll? By my suggestion, do payroll with someone they know what they're doing, that they do that every day.
Lillian, I have a question for you.
Sure.
What shouldn't we do for taxes to avoid amendment?
The amendments, let me go back. Amendments happens when the original tax return was done wrong. So what you need to do is, that's why I mentioned before, don't try to do the taxes yourself. Find a CPA that knows the industry and let them prepare it. Let me tell you what I do many times. They tell me, oh, I have an accountant, and they're kind of skeptical. So I said, okay, let's do this. Have your CPA prepare it, ask them not to file it, send it to me. I look at it. I've been doing this for too many years. And I said, okay, I go back with the client and I said, okay, ask the client this, why he reported this, like this. That is avoiding having to amend. So the CPA knows that the client is on top of the tax return. That's the way to avoid amending tax returns.
Thank you.
And this is what I do in my practice, and I do that with my clients at the SBA Community Navigator Project Program. I tell them, learn the jargon. Learn what a 941 is. Learn what a 940 is. Learn what a W-2, a W-3, an 1120, a 1065, an 1120 is, a 1041, a 1040 NR. So that when you learn the jargon, you understand exactly what the accountant is talking. And in my case with my clients, that's what I do. And I emphasize on that, because they need to be able to understand what I'm saying. It takes a little bit of time at the beginning, but then they understand how I work, and I send them to the same email address to learn the wording. Of course, I explain it to them first. How do we track assets, expenses, sales? Software and tools are important, but embrace and understand financial statements to better understand your company performance. What are the tools? If you're very, very small company that didn't do any transactions, don't buy QuickBooks online or desktop yet. Just keep everything, track of it in Excel spreadsheet. When they become my clients, I send them 2 Excel spreadsheets after I talk to them and we determine that they don't need QuickBooks, and I teach them how to use those Excel spreadsheets. Now, there are great softwares out there. We have payroll software, tax software, and bookkeeping software. And this is where I want to emphasize on the payroll part of it. Intuit provides the services for you to have an add-on, a module attached to QuickBooks for you to do payroll. But if you do not understand how it works, it's going to take you a long time to understand. And so just hire the experts. Hire a company that they do that every day. And I remember years ago, ADP would not take a one-employee business, but it seems that they have changed because they were losing the opportunity to help with small businesses. And now they're doing it. I'm talking about more than 20 years. They would not take one employee business because it was a lot of work. Now I guess their system got really better, or they're more automated. So they're taking one employee business, one company with one employee. You can also have time tracking software, especially if you have drivers that they take your van, your truck, to see how long does it take them. I remember this is a true story. I remember one time I recommended a kid to be one of the truck drivers. And one day I'm going to my office and I see the client's truck parked right in front of my office. I say, what is the truck doing here? Well, the kid, what he was doing is he will take the truck and go take care of his business, his personal business, have him going to lunch. He got fired, all right, but that's not the point. That's why it's important to keep the time tracking software. We also have some project management software, customer relations management software, communication software, website building software, payment transaction software, sales, marketing, and PR software. Now, all this, you can find it within QuickBooks. And I'm not advertising QuickBooks. I'm just saying that a lot of things, you can only need one program. The more add-ons you put it to the software, the more expensive it is. And if you have inventory, it's going to be expensive because now QuickBooks is kind of getting away from QuickBooks Desktop and going more into QuickBooks Online. But guess what? If you have two companies, there are two subscriptions that you have to pay with QuickBooks Online, where with QuickBooks Desktop, you can have as many companies and run them individually, separately. And this is where we say we provide training in QuickBooks Desktop and QuickBooks Online. I am a QuickBooks Pro advisor, so I can help you on both. And before you buy QuickBooks Desktop or you buy QuickBooks Online, we go over the prices because I cannot tell you which one to buy because it is your pocket, it is your money. My job is to train you. Now, QuickBooks Desktop, it used to be just, you can have the program for 3, 4, 5, many years. Now they got smart. Now both of them are subscriptions. You can buy QuickBooks Desktop for the annual subscription, or you can pay monthly, the same as QuickBooks Online. QuickBooks Online, you have to pay monthly. As business owners, you have to have basic understandings of the 3 key financial statements. I am going to cover the balance sheet and the income statement. The cash flow is a little bit more complex, which I will teach on a one-to-one basis. So the next slide, I believe, is the balance sheet. It's just to give you an idea. It's just to give you an idea of how it works. We have 3 areas within the balance sheet, which is assets, liabilities, and owner's equity. And always the assets must be equal to the sum of the liabilities and the equity. So in this slide, you'll see all the assets that the business can have. This is just a basic balance sheet on the asset side, but it gives you a good idea of what it should be. You should have the cash, the accounts receivables. Now, if you have accounts receivables, that means you are invoicing. That line, those lines, accounts receivable, less reserve for bad debts, are not going to be there if you're on the cash basis of accounting. Then you have the inventory, prepaid expenses, because prepaid expenses is not an expense until it becomes an expense. Notes receivables, that line again would not be there if you're in the cash basis of accounting. Then we have the fixed assets, the automobiles. With fixed assets, you put it at cost, plus whatever it costs you to set it up, shipping. And then this item, this asset is going to be depreciated. So we have the vehicles less the accumulated depreciation, furniture and fixtures less the accumulated depreciation, the equipment less the accumulated depreciation, buildings less the accumulated depreciation. Land is not, you know, we don't depreciate land. It is what it is. It's in the books, it's in the balance sheet at its cost. And then you have other assets. It could be goodwill. You know, a lot of large companies, they have goodwill, the value of the name. McDonald's, Burger King, they have a line for goodwill. So the next slide is going to be the other half of the balance sheet, which is the liabilities and the capital. Some of the liabilities, we have current liabilities and we have long-term liabilities. On the current liabilities, which is 12 months or less, we have accounts payable, sales tax payable, payroll taxes payable. Let me just stop for a minute in there. When you have a company that does your payroll, the payroll taxes payable is not going to be there, because what they do is it's set up, the system is set up so that that's the way I like it. I know they have different ways of doing it, but I like just to get a journal entry from them, which shows how much money was paid, what liabilities they pay, and if you want the reports, they give you access to their reports. We have unearned revenues, short-term notes payable, short-term loans payable. Then we have long-term liabilities, meaning more than 12 months, more than 12 months. Long-term notes payable, mortgage payable. Then we go into the capital. What is the capital account? It is the owner's equity. And for purposes of training, it just says owner's equity on that. But if it is an LLC, it will have the owner's equity will be divided between members' contributions, member distribution. If it is a C corporation or an S corporation, it will have owners, shareholders contributions, shareholders distributions. And then the net profit is the number that comes from the profit and loss statement, which is revenue minus expenses. If you have an income, net income, it will be a positive number. If it is a net loss, it will be a negative income. Both numbers, the sum of current liabilities plus the owner's equity, must equal the total assets on the first slide of the assets of the company. Now let's look at just the profit and loss statement. It's very simple. We have gross sales. We call it gross sales, right? But it could be service income. The name, it does not matter. It's just that that's where all your sales go in, whatever you sell. You can make an allowance for sales returns and for returns and allowances, but with the small businesses, I don't see it that much. Then you have the cost of goods sold. If you sell a tangible item, you're going to have this line item in your profit and loss statement. But if you offer just services, you're not going to have the cost of goods sold. What is the cost of goods sold? It's the cost of you buying the raw materials to produce an item. And in the cost of goods sold, you include the freight in, whatever you pay to bring that material inside. Direct labor, whoever is directly working on that tangible item. And there's some indirect expenses, and all depends on what you're producing, but it could be part of the administration salaries, it could be electricity, like if you have a warehouse and they have a different meter for the electricity, that will be part of cost of goods sold. And even if they don't have a different meter, you can do the math and do journal entries. And then we have the ending inventory. Again, if you do not sell tangible items, the cost of goods sold will not be in the profit and loss statements. And at the end of the day, you have the gross profit. You know, it will be sales minus the cost of creating an item. It will give you a gross profit. Just to see where you stand, right? Am I making enough money after I buy all my materials? But then after that, we have all the expenses, the operating expenses. Next slide, please. And we have the regular, this is just a list of operating expenses, but it could be more, it could be less, but it's better to have all of them so that you don't have to invent the wheel. And again, what I do is I give this in Excel so that you can keep track of it if it is a very, very, very small business that you don't need to buy a software program that we know is going to have a cost, a monthly cost. And then we have other income, which the company usually they're not in the business of purchasing computers and selling computers. That will be a regular sales income, right? But if you have a computer, and I'm just talking very simple, just a computer, and you pay $1,000 and the depreciation was $500, but you get rid of the computer, it's going to be you're going to have either a gain or a loss on the sale of the business asset. This doesn't happen often, but this area, the gain or loss on sale of assets, usually you handle it with your CPA when they're preparing the tax returns, because that's what we do. At the end of the year, we ask, okay, did you get rid of any of the assets? We send the depreciation schedule of all the business assets, and your CPA is going to ask you the same thing, and then you tell them, and the journal entries are done. Then there is a little bit of interest income. Nowadays, I just saw one that got 2 pennies during the year. And that's because the banks used to give a little bit more interest on accounts. Now, you're lucky they let you keep the account open with them, but they don't pay you any interest unless you go to a credit union. Very small banks, they give you a little interest on the money you have in the bank. And with that, you have your net income. That's the number. Remember, the net income, the net loss that flows through to the balance sheet on the equity part of the balance sheet. I am an old school tax practitioner. I believe in going directly to the source. That's why we put in this links to the IRS website that gives you information about LLCs, single member limited liability company, LLC as a corporation, creating a corporation from day one. And the last one is very important. It says IRS Small Business and Self-Employed Tax Center. Every single questions that you have, you will have them in there. And if you don't understand it and you're my client, guess what? I'm going to explain it to you, which is good, because then you can go back, read it again, and now it makes sense. At least that's how I learned. We also have sources from the SBA. SBA is a good source. And again, I use this as a guidance only. I don't use this to prepare tax returns. I use the IRS code, but the SBA also gives you information about it. And these are 3 links that you can visit. Very good links to learn about taxes. Now, if you are going to register a company, you will register through the SunBiz. And the way to do it is You go into Sunviz. This is if you haven't registered a company. You can see the names of the companies. And if you put the name, I always suggest at least come to three names. So you can check in Sunviz. If it is not in existence, you can use that name. If it is in existence, forget it. If it is dissolved, you can apply for it. The IRS also has a link for Florida small business. Florida is special. They treat us with love. You know, the IRS, they gave us our own link to the Florida small business, which tells you they're paying attention to what we are doing here in Florida. And I can guarantee you they do it for every single state, but I'm concentrating in Florida. Miami-Dade County also has a wonderful, I have visited all these links and I like them. It gives you a lot of information. Miami-Dade County also has a link for small businesses to read on how to start a business. And with that, I'm open to any questions you may have.
Okay, I just have a few questions, Lillian. Once again, this is a recorded webinar, so we'll be able to email you the link through our YouTube channel along with today's presentation, along with if anyone has any questions about payroll, they can contact Sonia, and the consultations are free as well. So she'll be more than happy to provide you with her information as well. Lillian, I have a question. How do you determine if you need to work with a CPA versus an accountant?
CPAs are a little bit more expensive, but there are accountants out there that they have been there for a long, long time and they know what they're doing.
Okay.
That's where you come in and you ask, what do they know, what this industry, and there has to be some sort of chemistry between the CPA or the accountant.
Okay. How would you determine how much to pay yourself as a business owner through your business?
That's a very open-end question. The first thing that you should do is make sales, make sales. But then, again, I do this with my clients. I send them a business expenses template, a personal template, meaning if you don't know how much it takes, you at least should complete that Excel spreadsheet. I can share with you, Jesus, so that you can send them as part of this.
Please, yeah.
So that you know exactly what's the minimum you should be taking out as salary. Let's say that, because you have to consider everything: food, electricity, gas, telephone. At the personal level I'm talking about, you have to consider your beauty products. I use a lot of beauty products that don't look good, but my hair's still messy, but I still had to put my creams, my shampoo, my toothpaste, clothes, shoes. That's personal. So if it comes out to be $1,000 per month, my salary should be more than $1,000. Because if you are in a W-2 with payroll, this is where Sonia comes in, she would tell you what's the markup. You have to say, let's say it's 1,500 gross to get a net of 1,000.
Okay. And do I need one QuickBooks subscription for each business I have?
If it is QuickBooks Online, yes, and that's where it becomes expensive. Mm-hmm. Whereas if it is QuickBooks Desktop, they just changed it about a year ago. Now it's a subscription as well. And I use it for my clients, and I have tons of clients, but it's only one QuickBooks Desktop, separate companies. The only thing that you have to consider is the fact that if you have QuickBooks Online, you can do it anywhere, right? As long as you have internet. Don't try to get into it when you're on a library. Don't do it, privacy with your business. Whereas on the desktop, it's easier because you can have a laptop. That's how I started. QuickBooks Online came recently, a couple of years ago. But QuickBooks Desktop, what I decided to do is have a laptop with me. So my QuickBooks Desktop is in my laptop with all my clients, and I still pay the annual subscription, but I can have as many companies as I want.
Awesome. All right. Thank you. I don't see any additional questions, but like I said, you could email me your respective questions. I'll be able to have Lillian to answer it. Also encourage you to register under the Navigator program. So that will be able to assist you with your business needs, accomplish your 2023 goals, also introduce you to our other business navigators and also our upcoming events. But like I said, I want to thank you to Lillian, to Sonia, to Clementina, and to Dania for participating in today's webinar. And I want to thank you, our participants. Like I said, we're family. Anything that we could do to be of assistance, we're an email, a phone call, or an event away. So so thank you all for attending, and I'll see you at the next webinar. Thank you. Have a good day.
Bye.
Thank you.
Thank you. Have a good one.
Thank you.